All right. We are live. Hello, everybody. Welcome back.
Are we live?
We are live.
How's it going?
Carlos, you're yawning. What's going on? You're tired?
I am
Busy day?
exhausted. Yeah, I had to make like an emergency trip this morning that required me to leave my house here at I left at like 4 a.m. and I've driven 370 miles and then I came back and did some work. Yeah, today I'm beat. So let's not talk about SoFi.
Let's give Truist and SoFi today, I think.
Yeah, Truist is doing well, man. I bought in. If you're a member of our Discord, I finally got the chance to throw some money at it today. I think we're all in, right? Everybody's in.
Vitaly, you in?
No, I think the price is too high for the spreads that I'm looking at. I don't think it's.
Oh, no,
I don't think it's a good
trade.
trade.
I just bought shares. If it goes back down, I'll probably
you could still do decent on the spreads, but it's not going to be as good as like 2 weeks.
Well, I did buy Enphase today.
And of course you bought Enphase. Why not?
I did buy Enphase today, and I bought a little bit of SoFi for a trade that I'm building up on SoFi because I think it's undervalued right now.
And I picked up some.
Well, hold on. Is your influence on SoFi growing because we have someone in the podcast who's been talking more favorably about SoFi?
Well, this is why I'm in Truist and SoFi.
Okay. Well, there we go.
No, at $5, it's a little bit silly. I mean,
it's kind of ridiculous.
If they're growing 50% compounded and they're going to hit profitability sometime soon, I think their valuation is totally creamed right now. So I expect upside. And whether it happens this year, I don't know, but I'm okay holding it for a bit.
Okay.
We get into the rug pull that's coming.
Well, so let me share my screen.
I only bought a very little bit, so it's fine.
That's what I'm saying. Like it's.
Why did we have? By the way, I said buy Ginkgo yesterday. It's up 18% today, but it's probably gonna be down 30% tomorrow. But we had a lot of green.
A lot
of green. ARK at 40, Shopify 62, Tesla. Almost at 190, doing phenomenally well. SMCI is up. NVIDIA, they have earnings tomorrow. If NVIDIA rallies past earnings and investors are willing to still pay that premium, that's going to be one hell of a story. Meta, 52-week highs. Shout out to Vitaly and Kris for doing great on that one. So
by the way, Meta, we talked about this before. I don't know if I made it clear. Meta's supposed to be $300. There's a gap fill in Meta. Look at the chart. It's supposed to shoot up to $300, and I'm still expecting that to happen. Whether it stays there or not, I still expect it to happen.
So what is your reaction to this rally? Is it fake to you? Do you expect a... by the way, James Bullard, the head of the executive chairman of the Fed today, said that the market should be you should anticipate 2 rate hikes. SoFi CEO, by the way, is anticipating 2 rate cuts before the end of the year. James Bullard says 2 more rate hikes. The market took his 2 rate hikes and they basically said, we're going to throw this shit in the fucking trash and we're going to rally because we don't believe you anymore because we think inflation's going down and the CPI is going to come in nicely. So why do you think the market rallied today, given how aggressive the rate hikes might be? Let's start with Carlos, then Vitaly. Go ahead.
I think that, like I tweeted, the rug is always tightest before it gets pulled. Well,
that's true because you think the sell in May thing is just getting started. You think it's gonna be
bad. No, I think so. I mean, what's the reason for this rally? If you ask yourself, what's the reason for all these companies to be rallying like this? I think this is sort of like it's like the froth. It's just a final bit of turnover, and then I think we start to come down. And I think it's going to take a while. It's not going to be right away. It's not like 1 week and then we're going to sit in the toilet for 3 months. But I think overall, we're seeing the highest prices, like the local highs for the next quarter. I think. I was going to ask you, when's NVIDIA's earnings? That's Wednesday.
Wednesday.
All right. So maybe going into the end of this week, I would say. But I mean, this just doesn't make any sense right now.
Ali, do you concur?
I just want to point out something. I follow these guys all-star charts, and they go on the compound quite frequently. So I just want to read this, and I'm blind, so I'm going to have to come closer. I've seen...
Zoom it in.
No, well, yeah, I'm in Discord, so I have to do it this way. I've been at this for 20 years. I've seen a lot of uptrends and bull markets in my day. I've studied many more that came before me. Along the way, do you know what you'll find a lot in the bull markets? New 52-week highs. Okay, so he's claiming it's a bull market. We're at a 52-week high apparently for the NASDAQ. I didn't even know that hit. Did it?
Yeah, that is correct.
S&P 500 is getting closer and closer. So once that happens, are we actually in a bull market? So maybe the rug pull, I don't know about this rug pull, Carlos, if this is actually happening and we're hitting 52-week highs on NASDAQ and SPY. But
so you think we're going to just keep going up from here?
Well, he adds a little bit more. So if you can come to our Discord, you can see the rest. But basically, this is a valid point. You guys got to take that seriously, right?
I'm putting the link to
Oh,
the
sure, but I
Discord.
mean, but most of the thing about Tesla hit a 52-week or a new all-time high, and it hasn't reached that in a long time. Palantir, almost all the stocks that we're following, they'll hit their 50, they'll hit a 52-week or an all-time high, and then they start to come back down to reality. It's the speed that they're running up. It's the speed that they're running up. It's just suspect that they're all just running up right now.
It's suspect. It's definitely suspect, Vitaly. It's a little sus. You know what I'm saying? It's like, really?
Why is it sus? I wonder. Let's say even if this happens,
some of that Mark Scherber debt ceiling, Mark Scherber's comment, debt ceiling, that's also at play here.
Oh my God, that happens every year or every 2 years.
Fall for it. It does, but they fall for it. Like, people have a very short memory.
Well, look, even if the sell and may go away happens and the summer is weak, which is possible, I think crypto is going to be weak no matter what. Whether S&P is weak and NASDAQ is weak, it doesn't matter. Okay, we know where we're going. Inflation is dead in the water. At the end of the year to 2024, forget about even 2024. Are we investing for 6 months? I'm not. So 2024, 2025, I expect all of these plays that I'm in right now to do extremely well, like extremely well. I don't think solar is stopping. I don't think Tesla's stopping. Even Truist might not stop. Okay, so I think there's a lot of bullish things happening very close in the future. And, maybe we have to wait a year. Big deal.
Kris, your thoughts on the price? Kris, I literally don't know when you slept today. I don't know.
I slept throughout the day.
He looks more tired right now.
You can tell he's a little more tired right now. What are your thoughts on the price action today since you were covering it?
I have to be sector dependent and look at companies individually, because I saw a lot of I don't want to call them crappy companies, but I saw a lot of companies that shouldn't be surviving. And that is not a good thing, because a lot of these companies, they're already kind of teetering on the level of bankruptcy. And my thing is, you typically want them to go bankrupt. You want them to get the hell out of the system, so that this way, stronger players can buy up the assets and call it a day, but somehow they're like cockroaches. They're surviving, which is okay, I guess, but that's not a healthy thing. I will say this though, the market is forward looking. So everything that's happening right now is something that the market is seeing. So what we're seeing is the drop in long bonds, and drop in short bonds, and long bonds are getting better. So you're starting to see slowly, like, the steepening of the yield curve, and we might end up getting a recession, but it's going to be a very mild recession. I know that that's been beaten to death, but the truth is, with a mild recession, if you have a company that's gotten beat up during a mild recession, then those are opportunities where you can pick up stock at a very cheap price. And I think that's going to do very well, over the next 2 years. I think we're starting to see a bull market starting to form, but I do think that we have one rug pull on the way that's going to just shake out a lot of these weaker players. And then after that, things can get a little bit better.
So you agree with Carlos? There's a little bit more of a pullback coming.
I think right now you look at the multiples on a lot of companies. They've gotten a little bit too crazy, right? So especially companies that, no, not like Wingstop. We can talk about that another time, but companies that are in the tech space that typically don't perform very well in this kind of environment, because what happens is, as companies cut back to manage costs, those companies tend to underperform the market. Now, when you combine overvaluation and underperformance, you get a really bad signal, right? So like an example is Snowflake, Palantir. These companies are typically more in line with what happens with company spending. So if we are going to hit a recession, then these companies shouldn't be valued at such a high premium. They actually should be valued a little bit lower. But I guess the market is looking beyond that recessionary move, and they're just rallying higher. So I wouldn't say I don't trust this market, but I would say that I would not be in a position where I would say that we're 100% out of the woods. 2024, I think, will be a monster rally year. But 2023, there's 20 through 23, there still needs to be a little bit of digestion on a lot of these weaker name companies. That's all.
Vitaly, someone did say, is this a good price to buy Enphase? I know we're asking you that question, but objectively speaking, do you think for a first-time Enphase buyer, this is an okay price to buy Enphase?
I say yes, this is a good time to DCA. Absolutely. And today I bought some more. I don't need any more Enphase. In fact, I shouldn't be buying anymore. I should be waiting till 130. I just can't help myself.
And help yourself. I love it. I love how
I got
convicted you
texted
are,
that
man.
today. This morning. There's a guy that's been sitting on the sidelines all of 2020. He's been holding his cash that I know all of 2020, all of 2021, holding his cash. And then he's texting me today about like, he's like, hey, so I dipped the toe in and I started buying some Tesla. Is this a good price for Enphase? He was literally texting me today. And I'm just like, same thing. I do think that we're going to see some lower prices, but these prices overall in the long term are ridiculously cheap.
Yeah, I think it's like when you get a 50% sale, and you know what, 70% sales coming.
Right. Be happy. Right. Don't
Like
look a gift horse in the
I'm
mouth.
pretty happy with a 50% sale right now. So
I usually don't sit on this much cash. Like I usually don't sit on this much cash.
The best companies to look at right now are ones that have taken an unfair beating over the last year and a half and are still on our way to recover. Like, so in terms of like the FANG stocks, Amazon. Remember, we had Rango come on, and he was telling us about all the things that Amazon
he was echoing
is doing.
you.
Yeah.
He was absolutely echoing you. Yeah, you and Vitaly.
But at the same time, Amazon hasn't gotten that recovery boost yet, as much as Google has, as Meta has. Like the only one of the FANGs that hasn't hit a 52-week high right now is Amazon. Right?
Yeah.
How about Google?
And I think that's
Google's as well. No,
Google's at
Google's
127. They demolished
Yeah.
the 52-week high.
His point was about AI, that the market, that's the one piece that AI hasn't been priced in to Amazon.
For Amazon,
Yeah,
correct.
correct.
That's why Amazon came out with a press release that they're introducing LLMs into their search engine, which might gut the advertising business, to be honest. But like, at least they're
Amazon.
Yeah,
Amazon is going to do that?
So Brett Winton actually commented. I was reacting to a video of him today from CNBC because CNBC was asking, "Hey, what do you think about Amazon introducing LLMs to their search business?" This is a press release that came out last Friday, and he was
Amazon
like,
has a search business, or you mean Google?
No, Rango said the market is not pricing AI into Amazon stock. They priced it into Google already.
Gotcha.
And so Amazon came out on Friday and said, hey, we're introducing LLMs to search. And so Brett was like, well, their entire ads business is based off people clicking on sponsored products. And so, that changes. Just the same problem with Google, right?
Yeah.
So we'll see how they adapt.
The one company that I'm definitely going to be like, I'm keeping my eyes on is SLG, like SL Green, but that's for like 2024. Like I'm still deep diving into a lot of businesses, what they're doing in terms of recovery, in terms of getting their people back to work. A lot of people that I spoke to, they said that, you know what, employers are somewhat fed up right now. They are not getting as much productivity from work from home that people assume that they would normally get. There's actually supposed to be a strike at Amazon. I don't know if you guys know that, like in Seattle, I think next week or something, with like employees fighting the work from office kind of trend. So what that is, they want to go back to working from home. And yeah, I think there's a general trend. BlackRock actually announced this week that 4 out of 5 days, their employees are going to have to come back to the office.
4 out of 5.
Yeah, 4 out of 5 days, which pretty much means like a full day. If you look at a lot of, I think what's his name, Jason Calcanis brought it up during the pod last week, that San Francisco looks like it's dead, but New York City's just booming, and I'm seeing the same thing. So I would say we have to be somewhat selective in the companies that we look at, but SLG, being a pure New York City REIT, is going to do well as long as they're able to get their occupancy rates back up and the financing comes back in their favor. Because right now, one of the tragedies is interest rates are still high. So if interest rates start to come down, their valuation is going to go up, because that means that they'll have more flexibility for valuing the assets that they have and using that money to redevelop assets that they could probably buy super cheap from other people. So yeah, so just keep an eye on.
Let's do this question for 5 minutes, and then we'll have our guest who's backstage here. Can you please give your thoughts about Disney's current valuation? I've been DCing for a while with a cost basis of 95. Any thoughts, junkies? I'm going to share something real quick. The one stat I think everyone needs to care about when it comes to Disney, and then Vitaly, you can give your thoughts. Price to free cash flow is 123. I think this is the most concerning metric of Disney. They also announced that they're combining the Hulu app and the Disney Plus app all in one. Why? Because obviously Disney Plus cannot attract subscribers if you're going to have Mickey Mouse on it all the time, right? You need some actual content. And so that's why Hulu's coming. But Hulu doesn't have, they have Keeping Up with the Kardashians. They don't have really the top tier content. So Vitaly, would you continue to DCA into Disney if you had a cost basis of 95 right now? Would you want Disney?
No. And there's a good reason. It's because what you mentioned, that Disney Plus, even though I have it, by the way, I have kids, they never go on it. I tell them, do you want to see the new Mandalorian? Do you want to see? No, they're tired of this shit. Okay. So Hulu is actually an important step to combine it together with Disney Plus. Because if my kids don't want to watch it, and remember what Peter Lynch said, that if you pick out something that the kids do want to watch, maybe you should pay attention. And all they do is want to watch Netflix and YouTube. So Google and Netflix seem to be a much better pick in terms of the streaming wars. And Disney, I don't think they're going to do well. And I'm not saying they're not going to be a big player, but I just don't think they're going to do as good as Netflix.
Carlos, Kris, any thoughts on business?
I'm a little biased because I worked for Disney. Disney was actually the first job that I got when I got out here because they owned ABC, so I was working for them. They've done a bunch of restructuring lately. Like they're definitely doing what it takes to try to keep costs down and restructure the company. I don't know how successful it's going to be, but I mean, I can say that like morale's not great.
Does your daughter watch Disney Plus at all?
Not really. I mean, it's all mixed into her.
What does she watch for entertainment? Like YouTube cartoons or something?
She does catch some stuff like, like the Frozens and Encanto, but she'll catch it on YouTube as like little clips. So like Disney, they're all making money. There's like a big shuffling now that's happening with even the streaming wars, like a lot of that consolidation, even like departments. Even things that used to be separate departments are now also being consolidated. They're bringing in new people that are now heading more and more things. In other words, we're still in the middle of this transformation. And honestly, the work from home thing screwed all of the plans up. Like the plans that were in place just screwed everything up because it screwed with production. They couldn't stick to their original production plans, but they still needed to produce content. It's just a mess. And a lot of those employees have their money and 401ks tied up in Disney stock. So there's certain pressure to keep. I know a lot of people that what they would do is like they would offer you a plan to retire, but if you're going to go retire now and your 401k's down and it's in this company that's tanking, the parks aren't open, like it's not easy. And Marvel's having a hard time right now. Like they're having
not that many Avengers you can keep making.
Amit, share this. This is the biggest thing that's concerning to me. They lost 300,000 customers in the US and Canada. Like
why?
There's
just because
the prices.
They raised the prices.
Oh, wow. Wait. Are you saying the subscriber growth they actually lost customers in the United States? Forget about India for a second. In the United States?
Yeah. It says US.
Well, that's crazy if that's true.
Not good, man.
That's even worse.
Not good.
Yeah. Some of it too. I don't know what you guys think, but some of it I think is the summer. Like people don't spend as much time.
Yeah, look, Netflix is just every company thought they can compete with Netflix, Paramount, Peacock, all this stuff, and it's like Netflix knows how to make content. It's not easy to win the streaming games, but they had no choice because cable linear is down the drain. It's getting cut, and so one of the good points is when you pay for
they're at 1992 levels, dude. Cable television's at 1992 levels now. It's so over. Streaming has killed cable.
Disney owns ESPN. ESPN is thinking of going direct to consumer. And the thing about it, if you and me pay for ESPN through cable, we pay the price. We don't have to watch ESPN. ESPN still gets paid. With streaming, it's like if you don't perform, if you don't put up a Squid Game, they just leave. There's no, you got to get the content. Otherwise, you don't get some direct relationship.
I used to have UFC Fight Pass that was just straight through UFC, but ESPN gave me a better deal, and so I now buy UFC through Fight Pass.
And same thing. Look at Paramount. ESPN. Paramount got its ass handed to it too. So I think the streaming wars, they're each killing each other basically right now to get that dollar. The eyeballs, the attention on those eyeballs to monetize it is rough. And the only one that seems to successfully been able to do it is Netflix, and they're keeping up with it. I don't see the subscriber growth going down for Netflix. So, but then again,
remember, I was going to say, remember Amit, we had a cowbell episode.
I literally was about to say this.
A long time ago, and I said Netflix is going to win, and what's going to happen is that people like Paramount are going to give them their content.
Correct.
Again.
Yeah. Yep. And Peacock, they give them The Office, The Friends, because they'll make more money.
They're going to get all of it. So once these companies start falling like flies over the next decade, Netflix is going to be the clear champion in all of this.
Yeah, no, you're right. I got to give you credit for that because I said that's not going to happen. And no, I said if it does happen, you're right, but I doubt it was going to happen. But you're right. I think that shit might actually end up happening. So, all right, we have a special guest with us here today. His name is Eddie. I'm putting his Twitter in the chat. He has been very active on Twitter. He is part of the Upstart community. Upstart is a stock that is up 83% in the past month. It was a stock that was at, I think, $3.99 at the peak in 2021, collapsed down to like $9, and it has since then rallied massively. And Eddie here is going to introduce himself and tell us what Upstart is, and we're going to have a discussion. But before we get there,
shit, I thought we were going to skip it.
At 19, you not
Are we at the?
At 19 minutes and 32 seconds for the, I think, like 7th, 8th night in a row. Ladies and gentlemen, we have hit 4 hundo.
Can we up that to like 500 so that we don't hear that bell for a little while? Can we like set the bar to like 500 now?
No. We gotta be very grateful. We did 300 for like 3 weeks.
The bar is now 425.
Or 450. Let's do 450. Let's raise it to 450.
Can I get 175?
400 every night. Thank you, 400 people, for spending your night with us. Eddie, what's up, man?
Hey, everybody. How's it going?
How you doing?
Yeah, I'm doing well. Man? Good day.
What's up, man?
All right. So Upstart. Yeah, I guess you can lay out your thesis. Floor is yours. Why are you excited about this company, and why do you think it has some big potential?
Cool. So Upstart is a AI loan approval platform, and so their old business is.
As you see in the thread, they're not a bank. They don't want to compete with banks, right? This is the Twitter thread you put out today.
Right. So they put out their platform to banks, and then those banks try to make loans through the Upstart platform, and they've got an AI algorithm that's supposed to be more accurate than the traditional FICO score to determine the risk of a borrower. So in 2021, the stock like absolutely took off. Revenue was growing like crazy. Went from 87 million to 305 million. In 2022, then the revenue just fell off. And the reason why the revenue fell off is because liquidity dried up. It actually turned out that, and I wasn't aware of this at the time, that a lot of the money that they were getting for these loans, the banks were acting as conduits for Wall Street. And so the banks would securitize the loan, sell them to Wall Street, and then that money just went away because as rates went up, then personal loans at 8% no longer is palatable to Wall Street. And whoever's holding those loans at 8% or 10% or whatever it was, those unsecured loans, they lose value as treasury rates go up. And so 2022 was a mess. Management started buying back stock to try to help. Management started trying to, they started like accepting loans that they didn't have a guaranteed buyer for, thinking that they'd sell them later. And that wound up biting them because they couldn't find sellers. So then they marked to market those loans. So those loans then were on their balance sheet and then losing value over time. And so the stock got absolutely crushed, as Amit said. I think the low was like 1260 or something.
Okay. So Eddie, before you go on, so when it came to buying shares, insiders were selling shares, but the company was buying shares, right?
I don't know about insiders selling and buying. I don't track that stuff.
Okay, because I'm looking at the insider sells and I'm seeing nothing but sells except for one sliver of a buy, literally like maybe a week ago. Yeah, let me just share the screen and I'll show you.
Okay. Can I ask you why, how you found the stock and why you're so passionate about it?
Yeah. So how about you answer those? How'd you find the stock? And then in general, what is the bull case now that the stock's at like $24 or whatever?
So I got interested in the stock when it was about 80 on its way down from 400. Okay. I was convinced that they were at least going to be able to maintain their revenue, and that did not happen at all. And their revenue just collapsed. I got interested actually because Amit had, I've been following Amit for a long time, and he had the guy that did the DCF for Sebastian on, and he had just kind of mentioned in passing Upstart. So then I looked into it and I was like, hey, this sounds like a good idea. This has really good growth rates.
And in general, Upstart is a platform that uses artificial intelligence algorithms to determine how to underwrite a loan, i.e. how to lend it. And they license that to banks. And so if I'm Bank of America, for example, and I use Upstart, I'm like, okay, here's someone who wants $1 million from me. I don't know exactly if they're the best person to give $1 million to. I'm going to just plug all this data into Upstart's platform, and then they're going to tell me what are the risks associated with giving this $1 million. And theoretically, if you do that at scale, Bank of America should be way more effective at distributing and deciding who to give loans to, which should make them more money long term.
Can you throw that first tweet on that tweet thread back up? That'll show how their scores compete with FICO, like how they are.
Okay. Did I kind of explain it correctly? That's kind of the core thing.
So sort of. So they get a commission off each loan that's approved through their platform.
Okay.
And gotcha. So the theory is that they can make a little more margin. The banks can make a little more money because they're approving further volume, but their default rates aren't any greater than what they'd get with the lower volume FICO model.
Okay. Now, do you think this company deserves to be up 83% this month?
Absolutely. I mean, if you price in the growth that I think is coming, absolutely. So the big catalyst that most people don't know about is they had the classic supply and demand problem. So they had plenty of supply of money before, and then money dried up. And so their solution to that, they started talking about this like 3 quarters ago. They wanted to get guaranteed capital to buy these loans. And so they were talking about it, and I was skeptical, and me and people on Twitter were talking about it, and other people were really bullish on it, and I wasn't. And they actually, at their last earnings, just announced that they got $2 billion in committed capital to purchase their loans over the next 12 months. That also came with a $350 million purchase of the loans off of their books. So their cash on their balance sheet is going to double to around $700 million for their Q2 quarter, because that was after the quarter disclosure that they put on their quarterly report.
I just have a question. But you said that they don't actually service the loans. They give this information to the bank. So why do they need to have so much cash on hand?
Because they have been negative cash flowing for the last year. They were highly profitable when they were, in fact, their trailing 12-month, the peak of their trailing 12-month EPS was $1.60, and it was growing fast, like 30-40% quarter over quarter when it was going up. And then it did the same thing going down. Now they're negative. They said they're going to be adjusted EBITDA neutral in Q2. So they hit $103 million in revenue Q1. They're anticipating, or their guidance is 135. I bet they beat that for Q2. And they're saying adjusted EBITDA neutral. I bet they beat that. They're cash on their balance sheet.
I have a question. The real question, I know a little bit about Upstart, but is it actually 10 times better than just using credit scores that banks have been using for the last 30 years?
I don't think so. A lot of people that are interested in Upstart are going to say it's all about the AI. I really don't think that the AI really matters. What matters is that they can get banks to make these loans through their platform, and that they can get their commissions. Like, that's all that matters.
Why would they do it through the platform if the AI, like, that to me is the moat? Why would the bank choose the platform if there's no?
I mean, I agree with you. That doesn't matter at the end of the day. What matters for the stock is revenue. And the way that
I get that. Revenue obviously pushes the stock up, but how do you convince banks to use your platform if you don't offer anything different?
Well, let's go over that first graphic.
It's not just different. It has to be 10 times better than the other thing.
Yeah. No, but because you said AI doesn't matter. That's why I'm just confused, because I thought the moat was AI based lending.
So I'm saying, as far as the stock performance, it doesn't matter if you have the best AI in the world. What matters is you're collecting revenues from that AI. And the way that they're going to collect revenues from that AI is getting banks to use their product. And the way that they're going to do that is they're going to show them that first graphic that's up on the tweet thread that shows that if you use their models, credit scores down to, I believe, 640, have a default rate of like 6% if you're going with their model. But if you look at the traditional FICO model, under 640, I don't know the amount. Maybe you guys can tell me if you have it up, but it's like much greater default rates for credit scores.
Can customers go on the app and get pre-qualified and bring financing?
So the thing is so number one is the automation. So they automate the loan. So you go on their website and that's part of the AI. So you go on their website, you apply for a loan. They hook you up with a bank. You get an answer within minutes whether you're approved. You don't have to upload any documents. I think last quarter they said that 85% of all loans are completely automated. They don't involve any humans at all. You don't have to upload any documents. You just get approved for a loan and you say yes, and you get the money deposited. I'm sorry, can you ask your question again, Carlos? I don't think I answered.
No, my question was if a customer can go on this website and get pre-qualified. So I can say, hey, I've been pre-qualified by Upstart to get this loan, and then you can go around and
So
sort
no,
out
it's just personal loans right now, which I would argue is the hardest kind of loan to make.
the hardest. They're also the worst for the customers.
Right. Well, they're unsecured. So yeah, you're going to have the highest credit score, and they're the hardest to make and make money at. But they're actually, so they've got an auto product that they're working on. And from the sounds of it, they're just waiting for liquidity to come back to really like launch that. They've got a bunch of loans on their balance sheet for researching that. And they say it's like ready to go. They're waiting for liquidity to launch that.
What are the average size of the loans?
I believe 12,000 was the average size of their personal loan in Q1.
Okay.
Let me get Kris into this. Kris, are you bullish on Upstart? Does any of this appeal to you?
No. I'm more looking at the credits. No, I'm just looking at the.
He just woke up, guys. He sleeps with his eyes open now.
I'm doing like a quick DD as I can. I'm looking at their loan book. I'm trying to see what kind of loans that they have outstanding. Like how much of their stuff. Like here,
the stock's up 83% in a month. That's why I'm.
Yeah. Okay,
you.
That's great. That's nice. That's nice.
So wait.
I don't trade on sentiment. I trade on actual like figuring out like what kind of stuff do they have. Like I want to see what their loans are like. What are they originating? You know, I want to see what kind of curves that they have, so that are they originating loans that are making money? Like are they just sitting on a bunch of loans that are not performing? So I'm sorry that you guys think that that's the dumbest thing about it, and I'm not just going to talk about it.
I think that's very smart.
Yeah, I'm a numbers guy. Do it.
Yeah.
So they're up 80%. This is great news. And as soon as you start to really zoom out,
this is that Palantir.
By the way,
this is exactly that Palantir.
Yeah, I know. This is what you look at, and then this is the reality of the situation. Yeah. Okay.
But then look at the RSI. It's poking out of its own window. It's jumping into the stock chart.
Yeah.
It's like,
oh my god.
It's run up, guys. This is run up. I think this is time to take some.
This looks like a short squeeze. Honestly, God,
really?
This looks like a short squeeze.
30% short interest as of last week.
So there you go. It's a short squeeze, easy as day. Like you could tell. Like whenever you have that much concentration of short sellers in one company, it takes very little to break the dam and basically cause a short squeeze to happen. I just looked at an article that S3 Partners just put out saying that this was actually a prime candidate for a short squeeze. So in terms of long term, I'm not so sure, but in terms of short term, I guess that, here, look, I'll share the screen with you. Because the thing is, like, insider selling so much has been the most troubling thing. And I know that some of the shorter term news may seem very bullish.
So nobody was buying. No, you're saying no insiders were buying when it was down
at $12. This is why I didn't like DNA. No one was buying Ginkgo at $1.20 fucking cents.
Yeah.
That's a bad sign when no insiders are buying their own stock. It's just bad.
Well, the thing is that just changed. That's the one thing that Eddie, I think, could mean a positive. I saw one insider purchase by I think their CFO, who for the last 2 years has been nonstop selling. Today he actually changed his mind and he bought a little bit on May 15th, which is also the same day that news that you're talking about was announced with their partnership with something capital to get $4 billion of liquidity to basically do more lending.
Okay.
So go ahead. Sorry.
So here's the way that the math works out. So if you look at the last 2 years, they had about $800 million in revenue each year. Each of those years, they had $11 billion in loans funded. So they just got guaranteed $2 billion over the next 12 months. And they have multiple other negotiations going on. So in order to hit 800 million in revenue again, which I don't think they're going to hit this year, but they need $11 billion of loans funded. I anticipate, and you guys are probably going to laugh and think I'm nuts. Maybe you can have me on if it happens. I think they're going to hit $600 million of revenue this year.
How much did they do last quarter?
Just $1 billion in loans funded, but now they've got this $2 billion in funding, and I'm guessing there's going to be more announced coming throughout the year.
How much revenue did they do last quarter?
Just 100 million, like 103. Well, it was 115, but then they took some write-offs due to the loans because they.
Okay. Gotcha.
So
I'm gonna just share my screen. So Eddie, here's the problem that I'm seeing with this company. Okay, you're looking at the operating expenses. Even in a down market, they're not cutting expenses enough. Look at this. They're spending.
They actually just cut 20% of their staff. A lot of the expenses you saw in Q1 are a result of the layoffs expenses.
Okay, let me just trim it down to just Q quarter over quarter instead. one of the things that they're doing is spending almost $57 billion in R&D. I mean, $57 million in R&D. They're spending almost 150 in SG&A, and they're barely making a gross profit of maybe 200 million. That seems kind of suspect, you know. And even in terms of net income, sorry, I was actually just quoting the wrong data. The data is actually worse. They did 117, so they down, and then their operating expenses. Yeah, I mean, look at this. They have 200. Yeah, 200.
We got to talk about their other
million
products before we talk about the R&D.
Yeah.
So they got a small dollar loan that they're working on, and this has been described by the CFO Sanjay as subprime. No, not subprime. Payday lender killer. So
the minute you said subprime, I think you just lost.
No, I didn't mean subprime. Payday lender killer. So
most of payday lending is subprime. Like most people that get paid, like
wait, hold on. If it's subprime, does that mean it comes in one day and not two?
No. Subprime means like people with lower end of the credit. So one of the things that you'll see is some people they'll have something called payday loans, but basically they get paid via check, and the people will go to a check cashing place, and the check cashing place will pay maybe a 4%, 5%, whatever charge, and they'll be able to get cash from that. Now, a lot of times,
what's that interest rate annualized though, Kris?
A lot
on a payday loan. Okay, so they're doing this through the banks, and the banks have a hard cap if you're a chartered bank of 36%. So they're automating a lot of this so that they can do much lower interest rates annualized, because it has to meet that 36% threshold. This product, they're actually having automatic approvals 90% of the loans. And then they're now working on a HELOC product that they said that they're launching later this year.
So my only thing, Eddie, I'll be honest, in terms of risk, this is a very, very high risk, high reward. Okay. So if they do pull it off, congratulations, you got yourself a 10-bagger, but that also means that there is a lot of risk that's being associated. And in this market, there's so many things that are not risky that you could probably get a good amount of return for. So I would probably stay away, but that's just me. Like my investing style is a little bit more like, hey, I'm not going to be in a speculative name for too long. I think that if the management can get it together and pull off a miracle, by all means, this could be a 10-bagger. But just based on the numbers that I'm seeing, a lot of this is just hopes and dreams on, hey, we have this product coming. Hey, we have this product coming. I don't invest with, hey, we're going to do this. I invest with, hey, we did that, and that's why we're here.
I was actually in agreement with you, Kris, until this last earnings. I sold off all of my Upstart last year after the big crash in May. I'd been in other things, but this last earning, when they announced the $2 billion, that gave me enough faith that they're going to keep landing those, and they've got nearly 20% of what they need just in that committed capital alone to hit their old numbers. And I expect more deals to come through the pipeline. And if they get $6 billion in committed capital, and then they also get, another $1 to $2 billion of funding through their traditional channels, then the revenue growth is going to be huge. They're going to
guys, we got 2 more minutes left on Upstart, and then we got to move on.
Yeah, just like I said, Eddie, I think that this could be a game-changing, like a big winner. But this is where I would say to anyone buying a company like this, make sure that your portfolio sizing so that it does not exceed a very limited amount of your total capital. So for me,
50% max, guys.
Huh?
50% max, guys.
I'd say probably 1% or maybe 2% at max. Like I wouldn't go further than that.
Wow,
because like I said, yeah. I'm just saying but Eddie, how do you feel about it? Like you're an investor, right? So how do you feel about it? How strongly are you with this company? Like what part of your portfolio is in this?
I'm not going to answer that, but
7.
Why not play options on this? Why not like sell options and at least make some money?
You mean on the shares? Like
yeah, because I'm sure you have over 100 shares.
I have over 100 shares.
Yeah.
So I was asked 2 questions. So I feel pretty confident. I think the cash going up on the balance sheet and the committed capital coming down the pike, I think these guys can get back to EPS positive probably late this year. I think the revenue growth is going to maybe not quite follow what it did in 2021, but be pretty quick growth. I wouldn't be surprised to see over $200 million in revenue in Q4. And then Carlos, what was your question again?
I feel.
I was saying, why don't you play options? I said you have over 100 shares.
Well, I mean, if you're in something like this, I don't want to sell the upside. Like,
you think there's still upside after?
Wait, hold on. You can buy calls. You can buy calls, and if you're wrong, then you lose that premium.
Then at least you can.
I thought Carlos was saying sell calls on the shares.
Yeah, sell some again.
If Palantir was up 83% in a month, I would be really fucking scared. And it seems like you don't care. You're like, well, let's see where the upside. I'm like,
no, I think this rides. I think this rides so many waves. I think it's going to keep going up. I mean, we might have a few down days, but I think it's going to keep going up. This is a known momentum name. This is it's got the AI theme. Then we got
that's not good up. To be AI themed for the sake of it, right? That's why I was asking you: is there an actual moat for AI? Because that's going to crash and burn. Like eventually, it's going to.
And I pointed you to that chart that we kept glossing over, but
no, I get it. But my point is, you say the AI buzz is around it. My point is, the stock is up 83% in a month. If you think there's more upside, what 200-300%? It's a 3-bagger in 1 year. Like, is that what you like? That's why I'm asking.
I legitimately think that this thing is probably going to be over 50 before year end. Legitimately, I think that's happening.
So that's another 2x essentially.
It's only what 3 times price to sales right now, with fast revenue growth.
I think the question you keep diverting from is that the reason it even doubled is because of AI. Okay, let's face facts. It's not because of their intrinsic growth right now. They're losing money hand over fist. Is that right, Kris? That you just looked at it?
Yeah, and their book value is down a lot. Like their book value right now is like 500 million. They've got a billion in debt also. So the debt is also
how much
growing.
cash do they have on the books? Did you look at that?
They have
around 350.
And what's the burn rate?
Yeah.
Burn rate is, I believe, they were quoted last year before the layoffs at around 30 million a quarter.
Okay, and they laid off, you said 30%?
20%.
All right, so 120. So you're telling me they can survive for like 3 years approximately.
Well, when they have $700 million on their balance sheet due to the sale of the loans, they also have $700 million in personal loans on their books. They do have $1 billion of debt on their books.
See, the other thing is the default. Yeah.
Mm-hmm. Let's talk about the debt real quick. So the debt is only 0.25% interest until 2026 because they sold convertible debt in 2021, and it's only worth, it only converts at a share price of like $287. So the share price would be have to be over that in order for them to pay anything more than 0.25% on.
Well, no, but that's the other problem that you're going to run into, right? You have something called a maturity wall. The minute that maturity comes up, no one is going to convert, which means that they're going to expect face value for that money, right? Which means that they have to refinance. Now, at their current stock price, getting refinancing on a corporate, you're looking at a 700 to 800 basis point thing. So you're talking about maybe $80 billion of additional interest expenses by then. So like I said, it's just one of those things like math. These guys with their cash burn rate is not looking good, but once again, they could turn that around. The other thing is with personal loans, default rates do matter. SOFI went from a 0.3% default rate to 4% default rate on their personal loans. Any default rates with regards to loans that they have on their balance sheet, those all become, non-performing loans, which means that you end up taking a bigger hit to your asset base. So like I said, I'm not saying that this company's bad. They've got something going on that may end up 10xing them, but I'm not seeing it just based on the numbers that I'm seeing,
Okay. That is awesome. Eddie, thank you for coming on and explaining your thesis. Yeah. Just put his Twitter in the chat. Awesome Twitter.
By the way, dude, I really liked your SLG breakdown. That was good. That you've been doing tremendous work with that. I think that is a much better play in terms of like total return, in terms of risk, because you actually have hard assets. They're valuable. You can actually see some of the stuff happening with a lot of upstart. It is a lot of speculation.
He's just making him feel good right now.
No, I'm not trying to make him feel good. No, I'm just, the thing is like when someone comes on,
he's like, don't worry, buddy, you've lost half.
No,
when someone, but the other one you got is great.
No, when someone comes on and they know what they're doing, you should compliment them. And a lot of times what it is when it comes to evaluating companies, people have different ways that they evaluate it, and they also evaluate it based on their risks, right? Now, what I can see with Eddie is that he's doing his due diligence in terms of numbers, and he's willing to accept a little bit more risk than someone like me. I'm 38. I'm totally risk averse. I'm a pussy. I'll be honest. I'm a vagina when it comes to taking risk.
31.
Okay.
Yeah. So you got 7 years of.
Imagine he said 45.
Trust me. I was telling you guys.
You got one more.
Guys,
Right. You got one more recession in you.
Eddie, I rode a company into fucking bankruptcy. Okay. I went from 50,000 to 250,000. And then every time the CEO would come on, oh yeah, the sunshine and fucking rainbows coming out of his ass all the time. And it was always like, hey, you know, we were going to perform, but, you know, this just came in. Hey, we could have done it this quarter, but this happened. And literally every quarter, it was the same fucking thing. The minute that they couldn't produce, I should have been like, you know what? Cut loose. Bye. Have a great day. So just.
And take your 5X.
Right. So I'm like, bro, fuck your 10X. I'm cool with 2Xs and 3Xs as long as they're safer return 2Xs and 3Xs, which, by the way, I think SLG definitely is. So keep doing more DD on SLG because I actually want to see that research. You know.
Yeah. Thank you, Eddie, for coming on. It's hard to come on and pitch live in front of 400 people. A lot of people.
Yeah, I got a little stage fright, but I appreciate it.
No, you did well. You did well. You did well, man.
You did it. And if anything, I would like to think that the takeaway from this is the evidence of a short squeeze. If you've ever seen that, I
100% agree.
And so if that's the case, you don't go broke taking profits. It doesn't. Here's the thing. I feel like sometimes there's uber bulls when they're holding big positions. They feel like they're letting their stock down if they sell some. Like you feel like it means I'm not convicted. I don't believe in the story. Like you also got 31 years old. I'm sure you got some bills, and it would feel good to just take a little bit of profit. And that you deserve that for the DD that you've done and the money that you've put in. There's nothing wrong taking some off the top when it run up 83%, man. If my house went up 83%, I'm moving into an Airbnb tomorrow.
Yeah, not to mention, this could still be a 10X. We're not denying that, by the way. It's just I would say when it comes to management.
Wait, what was that?
So no bullshit, bro. But tell you nope.
Well, I'm sorry. What I missed what was going on. I'm reading some of the comments.
He was like, but ending, bro. What about him?
Yeah.
What did he say? Well, I mean, like, look, at the end of the day, there's better things in this company. Like, bottom line, even Truist is a better company than this.
How much revenue growth is NK going to have over the next year?
I'll be honest.
We're not going to get started on that. Then
I'll be honest. So, yeah, I don't want to get into that. It's going to have a lot. But if Truist does what Kris is saying and it's undervalued, it looks undervalued, honestly, just looking at it. And I'm not even interested in it. It's going to go almost double, or the spreads will work out to be, who knows, 3 times. And you're trying to say you're going to get a double from this highly risky stock from 27 to 50? I don't know. It doesn't make a lot of sense if you're getting the same double from something safe and something not safe. It doesn't make any sense.
Only because the stock's already up 83%. If it was at 11 to 22,
are you up? Are you up on your position?
Yeah. Well, I mean, this year, I sold out of all of it in May of last year, and then all of it. I cut all of it.
That's why. That's why that makes sense. Okay.
And then I got back in at cheaper prices. And rode this wave up, and I think there's more room. I really do.
Can I point out, we've talked about sunk cost fallacy many times on this show, that you think this stock owes you money. You think this particular thing has to make you whole, and I don't think it matters what makes you whole or what gives you your 10x. It just doesn't matter. It doesn't have to be this thing.
Okay, thank you for coming on, Eddie. Appreciate it.
Bye, everyone.
See you on the next one. Bye bye. All right, John. What's up, bro? You're muted.
Oh, yo, what's up? What's up, guys?
Hey there.
What's going on?
I wanted to ask you guys about the Tesla Optimius bot. I haven't heard you guys talk much about it. I was just at the Tesla shareholder event, and I was just watching Elon talk about all the progress that they've made, and it really kind of just seemed like he was giving this vibe that it was going to be his iPhone moment when the bot actually comes out, And I don't know, how do you guys value the Tesla bot when you're looking at Tesla?
Carlos, how do you value this?
Why don't you go first, Vitaly?
Oh, you can't value something like that. It looks cool as fuck, but how are you going to value something that might take 10 years or 15 years or 20 years to play itself? We don't know. That's the thing. We don't know. I don't put any value on it actually in terms of stock price or market cap at all. Zero.
Only because he was talking about, potentially selling 20 billion bots.
He might, but think of it this way. Okay, so let's say Tesla itself, the company that makes energy packs, sells cars, that 5x is from here or 10x is from here, which is possible. I mean, me and Carlos might be done and just retired at that point. It'll
be Kris and Amit by themselves.
Yeah, like I'm
20. I'm 25. I'm 25.
Me and Kris have Truist, by the way.
You've got a lot of time. You've got a lot of time to run, but you got to be realistic that these things happen in stages, right? You do want a company that has the ability to build S curves on top of S curves, and clearly the bot would be an S curve. But let's get FSD first. Like, let's get Cybertruck out. Let's see the Roadster. Like, you know what I mean? Right. It's like in order to get to LA, you only need to see 100 feet in front of you with the headlights. Like, let's focus on what's in our immediate view. It's not to say that the bot isn't a real product and it isn't part of the roadmap, but to actually try to value it now. If it's 5 years away, right? What does the world look like in 5 years that bot would be introduced in? We don't even know. What's Amazon doing on the AI side to have deliveries? What are other companies doing on the robotic side? Maybe it's just so many variables of what the world looks like if and when that bot comes out, that it's nothing more than cool tech. You have to also understand too that was a shareholder day. That was not an AI day. AI day was a recruiting event for AI talent, which is very different than him trying to make shareholders feel good about keeping their shares. So he's going to talk.
So more of a hype thing and try and keep the shareholders.
Exactly. That's like an Alex Karp moment. You want people to feel good about their investment, feel good about the future. And it's not so much about numbers and details and exact timeframes, but it's about, we want to get you excited about what we're doing at the company, because what he wanted from that event is people to feel good holding the shares.
Oh, Carlos, I didn't know Alex Karp did that.
What?
Made people feel good about it.
I mean, shares. Look at Amit. Amit just did the neck roll.
I'm feeling good about Karp. I got like a mid-8s average on Palantir. So
and you're good. Then you sleep well at night.
Do you have
let's just say I got Vitaly and Kris to invest in my startup, and I might have pulled a little bit of a Karp of making them feel good about stuff. So I figured out how Karp does it.
So then that tells you that a rug pulls.
He did write me a nice poem.
I wrote him a poem. I slipped it to him at Cheesecake Factory, and I was like,
right, it was a Mickey.
Right, he roofied them.
Yeah. All right, John. Thank you for being on, man. Appreciate it.
See you guys. Thank you.
See you guys. All right. Last one of the night. Big Ray, what's up?
The suspense is killing us.
What's up, guys? I'm chilling over here on my couch. That's why I was.
Do you have us on the TV? Do you have us on the TV in your?
No, not today. Not today. I'm just kind of chilling over here. It's I'm having my R&R at the end of the night, if you know what I mean. I think Midwest Cannabis knows about that. If you guys know who Midwest Cannabis is on the chat.
Yeah. Where are you that it's so sunny?
I'm in Oregon, Portland. Here's my window right here. I'm just chilling by it. Yeah, so I just had an idea here about. So my cousin invests in this dog shit ass company called Space SPCE, which is I don't know if you guys know, it's like this commercial. They're trying to do commercial rocket stuff.
Richard Branson, right? Yeah.
In my opinion, like a really shitty company to invest in. But so
you're invested. You're invested right now?
No, absolutely not. No. So
hey, you're talking to a bull here, Carlos. You got to tell him.
I had some money in them for a while.
Oh dang! All right. So this was my question. So I was thinking of buying puts on it here pretty soon, although it's already pretty low, right? So it went from 3 to almost 5, right? But my only issue is the market cap's already pretty low, and the options chain is not that fluid anyway, because it's not that popular of a stock,
What's the volume like? Because for your options play, people actually need to be buying and selling the stock.
Yeah, see that was the thing, but
the daily volume on this thing.
So right now, the daily volume on this bad boy is
9 million.
3 shares exchanged hands.
Honestly, I haven't even checked, but my thought was here.
Today's volume was 17 million. I don't know why today was 17 million, but
it's because they're going to launch. They have a launch on Thursday.
Okay.
Yeah, because there's going to be, and that happens every time. There's always a
Exactly.
lot of excitement about this leading up to a launch. Then it launches, and then it fizzles out over the next couple of days.
Exactly. So that's kind of what my thought is. Not only do I think so that they're officially supposed to be offering commercial flights at the end of June. I don't think either of these things are going to go well, right? I actually think this company might go bankrupt, right? They already had the other one. It's like their sister company. It had something to do with it. Just went bankrupt like a month ago or something like that. So I don't feel good about this company at all. I kind of want to buy puts or profit from its way down, but I don't want to like start a short position or anything like that. I was just wondering what you guys' thoughts were on that.
I mean,
Kris?
I just have a video to show you guys, but so you guys talk about it first, and then we can watch it together.
Okay, Carlos, go ahead.
I just have to ask why.
Oh, I just know I do think what you just said, Carlos, is correct. Like it'll go up and then it'll fizzle down, and I think it's opportunity.
All right, so how much money are you talking, and how much money are you looking to make?
Oh, not a ton. Just this is kind of like a speculative position, maybe like 1,000 to 2,000 in there.
1,000. Okay.
On options.
If you feel like playing with it, then there's no reason not to. But just know that you could lose.
That's what I told her.
Just like
finally, it's actually funny.
Finally,
that was actually a pretty funny one. Someone give him an LOL, Jesus, and they're freaking nothing. He gets nothing. Okay, if you want to play with it as a sense of like, let me test my thesis, but I feel like you could also do this one on a watch list and put the $1,000 somewhere else. Like,
sure.
I just thought I'm not, I don't. It's like, I don't know why make that move, because it could also turn on you.
Yeah, I don't like betting against things
volatility.
just for the sake of betting against them because they're going to go down. It's bad karma. It doesn't work out usually really well. It's like, wouldn't you rather bet on something that you believe in? You know, it's one thing if something you believe in fails. It's another thing when something you don't even believe in succeeds. Okay.
Or if you're buying those puts to protect an investment that you have and you want to.
This was Chamath, right? He
This is Branson. And you said commercial flights in June. Who the hell is getting on that thing?
That's exactly my point. That's like, even if this goes well, like, I just feel like, let's say it does spike up to close to, I don't know, $10. I feel like that would make me really want to buy the puts here. But I think because you guys' infinite wisdom, I might wait for that launch and see how it goes.
$1 billion. Okay.
Oh, yeah. The market cap's low.
Yeah, dude, you get burned on these stocks. But Vitaly and I know what happens when you play with these stocks that are around 1 or 2 billion. It seems like the upside is so crazy because you're like, oh, one big investor, it's going to double, triple. But man, it can go to zero. And I'm not saying it's going to go to zero, but it's at $5 right now. 52-week size, $9. I don't know. I don't know why.
What's the market cap? What's the market cap?
$1.3 billion.
I mean, you don't mess with these micro cap stocks.
It's micro, man.
It's well, maybe it's not micro, but it's a low cap stock. It can go to 3 billion and it's like nothing. So his puts would become worthless. It's because it doesn't make any sense. It's 1 to 3, it means nothing, and then it goes back to 1. You know.
Right.
I think if he was looking at it when it was, I don't know, a few days ago and bought some calls, it did.
Well, we're in NVIX, by the way. We saw NVIX go to 1 billion to 2.5 billion to 1 billion to 2.5 billion. It's just like bouncing around there. So like,
but it's such a different. I don't know. I kind of like these small micro cap companies or even the small one. I like them to be boring. This.
Oh, no, micro cap is not boring.
I like them. No, but what I mean is like it's just stable. Like NVIX is exciting in terms of what they're doing, but the company is just very stable. You watch the earnings call; they're kind of boring unless you're invested or you're into the tech. It's I don't know. That's my opinion. And he left. He's all. I'm done.
He's giving up.
He did that. I didn't remove him. He did that.
for me, whenever I look at small caps, I see like what the return potential is on the small cap, and also like what the counterparties are. Right. The reason why I say counterparties is because let's say you are a small cap, but you provide a service or a product that's essential to a much larger player. That means that you have like an intrinsic value to you because they might end up acquiring you at a reasonable price, or they're going to keep throwing business your way. So as an example of a small cap that I got right was SMCI, which was super micro. It was a small cap. It's like, I think the total market at the time, its market cap was only like 5 billion or even less. SMCI, let me just look it up. But they essentially worked. Yeah, right now they're $8 billion market cap. When I was talking about it, it was like $4 billion market cap, and actually a little bit less than that. But the one thing I saw was that, dude, their CEO was like having meetings with Lisa Su every week. Like during their investor presentation, you had representatives from NVIDIA come on, from Microsoft come on, from Intel come on, from AMD come on. So what happens is there are companies out there that have really niche products that can be very, very important in the future. So I would say if you do want to invest with a company like that, just look at the counterparties, right? Because the counterparties will tell you whether they have a legit product or not. So with regards to Enovix, if Enovix gets a partnership deal with someone like, let's say, Qualcomm, right?
Apple,
to produce
Apple's the
handsets.
one
Well,
that-
no, Samsung is the
Apple's
one that's
one.
known.
That's the
Right.
one.
So
Yeah.
those are the kinds of things that you want to look for, because then it gives you this inbuilt security that it's not just some bullshit company trying to peddle a product that may or may not be effective. So I would say anytime I look at a small cap, the first thing I do is, okay, who are their customers? Because if they don't have any real customers out there, they're probably not going to make it. And let's say they do become undervalued, there's always an off chance that their counterparties who's got tons of money will buy them out, right? And just say, okay, we'll just bring this in-house because this is a category of product we don't have and we don't have to pay for them. And that could mean a $1 billion company or a $5 billion company can get bought up for $20 billion. That's actually happened to me a couple of times as well. So
guys, what are you doing Thursday at 10 a.m. Eastern time?
So before we leave space,
No,
before we,
10
hold on, hold on. I've always said space. Hold on, space. I think when you even invested, I was like, it's one of those things that if it hits, you, sir, are a trillionaire, because like if that actually succeeds, it's like one of those really a literal moonshot, right?
The thing with that hitting though is you're going to see it coming so many years. It won't be in one launch. It's going to be several quarters. It's going to be having success.
No, I agree. But if you bought a small position, someone actually bought, instead of the puts, you bought $1,000 of space and you forgot about it. Okay.
Yeah.
And you put it away. And then you woke up 20 years from now. Oh my God, I have $600 billion.
They did it. Yeah. But it just takes so long to play out.
Yes. Yeah. 100%. 100%.
So guys, why don't we do that? Why don't we watch the launch? 10 a.m.
Wait, who's launch? Space's launch?
Wait, is that like the last launch?
Because Carlos, you slept through the last one.
It was super early, and I had a crying kid. Sue me.
No, I don't blame you. I'm just saying, do you want to do that?
So then, why don't you? Do you guys want to watch the launch without me on Thursday? It's
Chris
7 a.m.
Chris needs to sleep. I'm not putting Chris to bed. He needs to fucking sleep because he doesn't sleep.
I'll
be here.
I'll probably be awake. It's going to be 15 minutes. We just get in there and do that.
If this was a SpaceX launch, I'd be with you, heartbeat, no problem. But I don't really care about this one.
I'll check it out. If you want to join the mid, cool, we can do that.
I'll do it. Okay, one really last quick topic to end it out, because someone on Twitter asked, Biden McCarthy debt talk ends with optimism but without a deal. The person on Twitter just wanted to know, what is our perspective on, is this hoopla? Is this political theater? Will the stock market drop by 45% if we don't get a deal? What's actually going to happen? Vitaly, let's start with you, then Carlos.
Of course it's hoopla. First of all, they have 10 days from what I've read. It's June 1st. So they always push this to the end. Let's wait until the end comes before,
Why are they pushing it to the end?
It's political football. If you want to get your way, you have to push it to the end, to the last minute, to the last second. That's the way it works. Have you ever done a deal? Like, I don't know if you've ever actually done any deal, like a real deal. Like,
yeah, real deal.
Something, right? A business deal, a house deal. You push everything right to the end when everybody has to make a decision. That's just the way it works. And that's when you get the best price where both parties are more satisfied. Anything before that, no one's satisfied. So that's just the way it works.
Yep. I agree with what he said. I think there's actually already a deal. They're just working out the details now, the fine details, and it's what you're saying is just political theater. Both sides are using this to fundraise right now. Why would they announce the deal? Why would they announce it? Just keep going. Let Americans go.
Go ahead, Chris. The Republicans are out there saying the Democrats spend too much, and the Democrats are coming out and saying Republicans don't tax anyone, and they
want to shut the government down. They're trying to take your Medicare.
And each one is sniping at each other, saying, "Oh, look, it's the MAGA Republicans," and the other side is just the progressive nut job. So it's all political posturing. The deal's already been made. It's just the finer points have to be ironed out. So right now we're just looking at the asterisks, right? Basically, that's how a deal works. 99% of the deal is already pre-negotiated, but then usually it's a challenge of, okay, how do we get it to close, right? And basically most deals that I know are usually just an asterisk at the end saying, if this, then that, and that's about it. That's all there is.
Yeah.
Okay. That is it for us, 457 people. Thank you for being with us for an hour on today's Monday. Monday. We're starting it fresh. Yeah.
I actually had a question that we can end the podcast with.
Okay.
And this is actually to everybody. So a question, and it's a short answer, guys. So, okay, short answer. If in 5 years, we fast forward 5 years, you guys are retired, right? I look ahead and I say, crystal ball, I'm like, Kris, Amit, Vitaly, you're all retired. What stock or asset was it that retired you?
We already know all of it for everybody. No. Palantir for that guy, Truist for this one, Enphase for me, and Tesla for you. Done.
No.
I don't know if Palantir retires me by 5 years. Enphase could definitely retire Vitaly. Tesla could retire you, Carlos, I'd imagine.
I actually think mine would be Bitcoin.
Ah, that's why you wanted to ask this question. Bitcoin. You know, we've been sleeping on crypto, but if 2024 is the monster, it's going to come back. All the hype's going to come back, and all the FOMO is going to be there, and that motherfucker's going to go back to 30, 40K, and it's going to be interesting.
60, 70K, 30, 40K.
That's you think that would happen? Okay.
Oh, yeah.
I'm gonna shock you guys, but it's going to be SoFi. SoFi.
You have that many shares or that many calls?
Not yet.
What is going on? He's been replaced by Elon's robot.
This is why I like to ask these questions because
no, not yet. But as I do more due diligence on SoFi, this is a $4 billion company, right? But the assets that they have, plus all the opportunity that they have, is going to be something that's going to be revealed in the next 5 years to 10 years. I think SoFi has the ability to disrupt so much industry. And the leadership at SoFi is something that gives me a lot of confidence to say that this could one day be a 10x company. And believe it or not, 10x is not that far off. You're talking about $40 billion.
Yeah,
$40 billion for a bank with that many assets, with that many income streams. Whether you're looking at, and they've got the zeitgeist of the younger population down.
They own LA's stadium. Everything that's in pop culture happens.
That's sort of a kiss of death, though. That's like winning the MTV. What did they say? The MTV Artist of the Year. Yeah.
I mean, Lakers Staples Center. How long is
Crypto.com theater? Crypto.com.
Well, that's stupid. Crypto.com is stupid. That's why.
I mean,
like,
just saying.
Well, what do you even do on Crypto.com, bro? Like, it's just a trading firm.
I think they have
when you name a stadium or you take any of those names, it's usually not good long term.
So someone says it's 10x conservative. Like in terms of real dollar value, 10x is actually pretty conservative, considering that if you look at the major banks. Most major banks can range between $50 and $100 billion. I think SoFi has the ability to become a top 10 bank. And if they end up as a top 10 bank by 2030, that means that they could be a $100 billion market cap, which means a 20x from where we are today. So if if I were a betting man and you said, Kris, here's $10,000, put it on a lottery for the next 10 years, I'd put it in SoFi and just let it put in some random account and let it grow. And eventually SoFi will be GAAP profitable, and then they'll start generating dividends. And then the dividends end up generating compounded interest. And you can end up walking away way better off than you are today. But there's a caveat to all of this, and that's you're going to need perfect execution by leadership at SoFi, which from what I can tell, they have. So just FYI. So right now we could be at a very, very low point in this, and I think we've hit a bottom.
That's not even taking into account Galileo at all. Nothing you said is about the tech.
I think so many people are giving Galileo this whole Galileo to me is hopium. Okay, it's like great if you have it, but if they just keep functioning as a bank that does great customer service, provides great services to younger people, and then materializes them into the future, upsells them, as Carlos said last time, because that's what I'm seeing. I'm seeing that this company is getting into household names, upselling people, getting to the point where people are putting their money with them, and then they're working on lending out that money, creating investment. The other thing is, did you guys ever notice on CNBC, they have Liz Young on there, the contributor? Right. Which means that they're even considering doing more things on the investment banking side. You have ETF plans, they have insurance, they have this, they have that. I mean, there's an endless stream of income that this company could end up generating on top of the net interest income margin that they typically get. So you're talking about fees and services that are going to be rendered in the next 5 years. So as this company, I'm going to be very interested in seeing how this company does over the next 10 years in terms of execution. All the numbers seem to be trending in the right direction. If you guys have a minute, I'll show you exactly what I mean.
Oh boy. All I gotta say is Noto's a straight up killer.
Yeah. So Vitaly, if you're The question is not the question is not what you want it to be. I'm saying if in 5 years, crystal ball, you found out that you were retired, what stock do you think did it? Is it Tesla? Is it Enphase?
It's Enphase.
You think it's Enphase? You think it would have been Enphase? If you're looking at the all things being equal, do you think Enphase will outperform Tesla over the next 5 years?
It's hard because me and you own similar things in terms of our major positions. Like I've always said, you only need 4 things in the market. Everything else we talk about is nonsense. It's Enphase, it's Tesla, it's Bitcoin, it's Ethereum. Any one of those do what we were talking about. I think I'm retired.
But that's why I feel like
it's going to be one of those 4.
Even knowing, the large Tesla position or Enphase, I still think it would be Bitcoin. I'm saying in the next.
Once again, I'm fine with that too. So okay as well.
So there's 2 main factors that whenever I look at a bank, these are the two things I look at: net interest income, how they're doing with that, because this is how much money they're generating on loans, and then the expenses that they have. So you can see their net interest income is just gangbusters growing at almost a 30% clip, right? And that's exactly right. That's exponential. And then after that, you can go and look at their non-interest income, right? Which is another cool thing to see. Once again, exponential, right? And last but not least, right here, net. Yeah,
it looked like it was.
And then this is net income, right? Net income, you can see, is starting to trend in the right direction, and this is a TTM basis. So right now, the last quarter, they're only net income negative by 34 million, which within like 6 months, it's going to be net income positive, which means everyone's going to wake up and say, "Wait a second, this is a company that's generating money. I better throw my money into it and diversify."
What a crazy idea, bank.
Yeah, making money, right?
Money, whoa.
Yeah, so I think we've seen a theoretical bottom with this company. Could easily 10x in the next 10 years.
Well, on this I agree. The $4, $5. I mean, that report that said $2.50 is just stupid.
Come on, guys, come on.
So the $5 seems
that was an opportunity. That was a fucking opportunity.
Yeah. I'm not going to discuss what my position in SoFi is, but let's just say it's getting there. It's getting there, and this is one of those companies that like I said, I would not mind holding 10 years plus, based on the research that I'm doing, based on the leadership that I'm seeing, on terms of execution. They're doing great. So let's
revisit this in 3 months and see where we are at.
Let's see where we're
at. I think we're going to be pleasantly surprised.
If they get profitable and they get even closer to that next quarter,
they are Q4 guaranteed net income profitable. This guy does not look like he's the type of guy that's going to bluff you in telling you that this is net income.
Same thing with Carp. Carp said we're going to be profitable.
I don't know about Carp.
Carp followed through on his promise, and so
okay. He used mathematical mumbo jumbo.
Carp would definitely bluff you.
Carp is
like the ontological nature of profitability.
All right, bro. Plug the new channel. Come on.
Plug the new channel. What really is profitability? Who decides what profitability is?
So
Plug the new
channel.
While
I put everyone's Twitters. Okay, keep talking. Say something while I do
the new channel where it'll eventually be migrating there. All of the
shorts the whole time. I'll do it again.
All of the shorts that come out of our episodes will be on that channel.
Please subscribe to the new channel, guys. We need to get this one to 1,000 subs. We're at 500. Thank you, 435 people, for being here. We got Carlos's Twitter. Please follow him at Sphere Cubed. We got VR Vitali, who loves the metaverse, which is, I guess, why you picked VR. Right there.
No, that's an AI Vitali. The real Vitali died in 2006.
So I'm just going to address this because someone put in didn't Kris a month ago say that he was bearish on SoFi? So I was bearish on one subset of their business, which is their personal loans. Yeah, exactly. But after the data started to come out, which is what's happening right now, the data is telling you that they're able to manage it, right? That's the key. Whenever numbers change and they actually trend in the right direction, you should change your thesis. Screw this nonsense where it's like, oh my God, I hate this company because it's not doing what I think it's going to do. No, if a company changes directions in the direction that I needed to, bro, I'm a buyer at all levels.
And that was your only bear case was the delinquencies, the loans. You never had a bear case for Noto or anything like that.
No. And that's the key, right? When you're looking at companies, as the data changes, you need to change. That's what makes a good investor, right? If the data changes into the negative direction, that also means that, hey, maybe there's something wrong fundamentally at the company that you should be taking a look at. If you're seeing a company that's generating, used to generate X and now is generating Y, the question that should right away is be like, why are they generating Y now? What's going on? And then do I want to be in a company and at the valuation that makes sense at the Y? Is the CEO who's at Y right now, the guy that you want to lead this company to get them back to X? So yeah.
I was trying to do a trade today, by the way, more on SoFi than Truist, and I had a lot of calls I was trying to purchase
on SoFi
in the morning, but it
Until
didn't
ran up.
It didn't hit my price, and it ran up a little bit too much. But we'll see what happens.
2025
Well,
leaps.
guess what?
Those calls.
2025 leaps. Yep.
Okay.
Well, I already beat you to the punch, son. Letting you know. Hey, listen, I spoke about it on Friday.
I don't expect to, by the way, keep them till 2025. The whole point of these is to trade these.
Well, yeah, because if we think 2024 is going to be gangbusters, even if you didn't get them at the best price that Kris got them at when it dropped to 470, it's going to do well.
This actually might be a position where I actually exercise my options and actually pay to get those shares at a cheap price.
That's not true.
No, it's true.
That is not true. I bet you. I'll bet you right now.
Has one of you ever exercised an option? Ever?
I have.
Yeah, I have. Yes.
Yeah.
Okay.
I've done it to
and
a
it
put.
was a mistake. You should always sell the options.
No. I did it with a put, dude. The stock that I had bought some puts on ended up going down 20%. So I was like, okay, exercise. The shares went this way, the cash went in this way, and I did well.
Cool. I love it, and hopefully this pod keeps going this way. And that's the end to the pod. That was a nice ending, right? Clap it up a little bit.
Yeah.
All right. Good. Thank you, everybody. Subscribe, follow all the accounts in the description on the Twitter. Timestamps will be up in about 10 minutes, so the pod will be timestamped. Oh, last minute super chat. Great takes on SoFi. I'm up 40% on Palantir. DC at 808.
Yeah, can you thank everyone who did the
seriously? There was a couple
today.
Yeah,
I love Sergeant Fighter. Great name.
Sergeant and Sergeant Fighter. Thank you for that. And Tamtron. Unity deep dive either tomorrow or Wednesday. We'll come with some research and we'll get ready for a deep dive on Unity.
Yep. And then there's one more, right?
It was the same guy. He just sent.
Okay. No.
Oh.
Nick.
No, we did that. That was the Disney one. We talked.
Okay. Very nice of you, Tamtron.
I think he sent it by accident without forgetting to send his message, and then he sent it again.
Yeah, well, he's got some money.
Or he just meant to send it.
Burn it on us, baby.
18 minutes later. Yeah.
All right. Later. Thank you, everybody. We will see you tomorrow night. 10 p.m.
When are you take us to Cheesecake Factory? I'm not seeing any of this.
First of all, weren't you supposed to be here in New York this weekend?
I was.
So what happened? Because I was going to set up something with you and Vitaly. And
I had to
change.
If you want to go to Cheesecake Factory, let's do this.
No, I'm ready to go. I'm ready to go. But I thout Kris was coming this week, so I was like, all right, we'll all set it up. But...
Yeah.
All right.
And then Uber eats something in my house.
No, that's actually
bring an iPad and Uber.
You got to tweet it. You got to be like, "Thanks, guys. You guys bought me this." Yeah, let's do that one day.
Well, I met with Sonny. I finally met the first person I ever met on the internet. I met with Sonny.
That was
Sonny Coates.
Yeah,
right?
I met him. I didn't.
The guy who bought
realize
Enphase at like 90 cents or something. Right?
Bro, his story is crazy.
When did you meet him? When?
I met him. Was it 2-3 days ago?
Oh, cool.
Yeah,
he was
cool. On. He was here, and I didn't realize that. I was like, oh shit, if you're here, we should go out and get some food. So that was good. We met up in a place in Studio City. Cool dude, really interesting story. Yeah, his Enphase story is crazy, and he's got he's bullish on Enovix. He's got some stuff to say about Enovix too.
DJ Rogers,
is he willing to come on? Because I messaged him on Twitter, like
he has a podcast, by the way.
He does. He has.
I know. I saw that.
Yeah.
Is he willing to come on to Finance Junkies? I'd love to hear.
I think he would. I think he would, but I don't know what he would, what he would want to get into and what he wouldn't.
Gotcha.
So.
I mean, what did you say to him? Because he wrote that Amit has to apologize to me first. What did you call him out on something?
No. I used to come to my morning streams like months ago. I used to be like, this guy's awesome. He bought Enphase at 95 cents. He's fucking rich.
We'll clip it out and we'll tweet at him.
Okay, sounds good.
All right, later.
All right, everybody. Good night.
Bye.